All of that takes us to our talk of the tape, how best to position if stocks, in fact, are poised to continue their winning streak. Let's welcome in our panel, Treasury Partners Richard Saperstein and SoFi's Liz Thomas. Good to have you both with us.
Thank you.
Are we going to continue this record run for stocks?
We will, and it's interesting because earnings are accelerating, yet multiples are compressing. And all I can attribute that to is the fact that the hyperscalers are now being, or have been, valued as capital intensive and asset heavy versus asset light. And I think that's a mistake because it would be justified if these companies were not showing growing earnings, growing profits, and growing operating cash flows. But they are clearly way ahead of the game. Last quarter, 30 to 60% cloud growth, and that's going to continue, and eventually it's going to get valued by the market. So I would stick with the hyperscalers, the large cap tech, because I think the market's going to re-rate over time. You saw the Meta announcement today, and that's only going to reinforce that trend.
Do you agree?
I do agree. I think directionally in the second half, the movement is going to be higher. I do think that semiconductors continue to see volatility. I would expect a little more downside in that space just because of the big run they've had.
Okay.
But I think the Meg 7 comes back and gets back into the forefront, and the hyperscalers as well. I mean, every time in this market throughout this cycle that we've had any volatility, and I think we will have volatility into fall, investors continue to flood back into those big names. Now, in the first half, they lagged, which I think surprised most investors. But in the second half, I think they come back in.
Wow, so neither one of you are really big buyers into the idea you're going to have this big broadening move away from the hyperscalers.
I think
you don't think the juice has been squeezed, so to speak, from those names, at least in the near term, and now we need to see more of the show me on the return on all this investment that they're doing?
Okay, there's a couple of dynamics here. First of all, the broadening, sure, it can happen, but look at the PEG ratios, the price earnings ratio to the growth rates. You look at the more traditional consumer stocks, it's 5, 6, 7. If you look at large cap tech, it's 1. So you're paying 1 times for the growth rate versus, let's say, a Kimberly-Clark, a Coca-Cola, Procter & Gamble.
The current growth rate.
Correct.
But what happens if, well, we don't assume that that growth rate is going to continue at this clip in perpetuity.
Well, that was reinforced today with the Meta announcement. And if you look at the growth of the operating cash flows of these companies, you take Microsoft over the last 3 years, their OCF has doubled. That's doubling to what, $200 billion a year?
Well, how come that stock has done absolutely nothing?
That's why it's probably a great value right here. But the second trend that's important is this concept that the beneficiaries of the spend have benefited more than the spenders, right? So the Ciscos, the Dells, the Aristas, the Amphanols, which we own, okay? But I think that that trend will continue, yet you still want to own the large cap hyperscalers. I like that business.
Are you in the bigger broadening camp or no?
In some ways, but I wouldn't call it a broadening trade. A broadening trade that we've been talking about for most of this period is this cyclical broadening. So it's everybody wins sort of thing. I don't think that's what's going to happen. I do think the broadening out into financials, some of the healthcare names were nice confirmation of some of this, and I do think healthcare will continue to benefit.
Well, I mean, you're going down the list of a lot of areas of the market that you think are going to.
Just two.
Yeah, but
so
you
far.
think tech's going to do well also, don't you? The mega caps at least, maybe not the chips, but.
So let me be specific. So as money rotates out of the chips, I think healthcare continues to be a beneficiary of that, not because it's a different choice that is a substitute, but because investors are looking for growth opportunity and they're finding it in pharma and biotech. So I think that still happens. But I do think Meg 7, to Rich's point, I do think Meg 7 comes back in. You do stick with those. Also, healthcare is one of the sectors that tends to perform the best in a midterm election year, and some of the volatility that we're likely to see in fall is going to be about midterm elections. So I think healthcare is a place where it may look like there's a broadening trade, but it's not this wholesale cyclical everybody wins sort of broadening trade.